Today's Animal Spirits is brought to you by YCharts. Client meetings move fast in Q1, but YCharts has you covered. Their popular top 10 visuals deck is packed with ready-to-use charts that cut prep time and make client conversations easier. The deck covers the conversations clients actually want to have, from long-term investing to portfolio allocation and retirement, and setting expectations early in the year.
That's right, Ben. Everything is fully customizable, easy to brand with your firm's logo, and constantly updated with new visuals and fresh materials as markets change, so you're never sharing something outdated. Instead of starting from scratch for every meeting, this gives you a simple way to stay prepared and keep conversations focused. Grab your free copy with a link in the show notes, and you get 20% off your initial YCharts professional subscription when you start your free YCharts trial through Animal Spirits, new customers only. Welcome to Animal Spirits with Michael and Ben. Ben, how was your weekend? Did you avoided that nasty car mashup on the highway?
Oh yeah, 100 cars. My kids kept wanting to see pictures of it.
Where was it? Was it near you or other side of the state or what?
20 minutes away, probably.
Oh
yeah. No, highway we take all the time. Yes. Blizzard conditions in Michigan. Kids had a snow day today. What a great feeling, right? Don't set your alarms, kids. We're going to see if it's a snow day. They wake up, and it's kind of like Christmas morning, you know? They wake up, realize it's a snow day. My son was all dressed and ready for school, and we told him it was a snow day, and he went and took all his clothes off and put his PJs back on.
It's one of the best feelings as a child.
So pumped. That's like one of the good things about having this kind of weather.
Legs up, Jerry Springer. What could be better?
Yes. Yes, exactly.
All right. It is Tuesday morning, 9:08, 22 minutes away from the opening bell, which you won't hear on my computer. And a little bit of volatility. Futures are down. Gold is surging. VIX is up to 20. And the source of the indigestion is the president's desire to annex. Am I using that word properly? I don't know. That might have been a stretch. Denmark.
Well, you're adding. Annexing is to like add a, kind of.
Yeah, right? Okay.
I guess,
right. Yeah. So the president is trying to take Greenland from Denmark. Apparently there is strategic interest for us. I don't know. Being closer to Europe, we could rule with a stronger fist, and there's some rare earths and minerals, and I don't know.
No, you're forgetting that there's the green in the land there.
It's very green.
It's a lot of land.
Nonsensical, if you ask me. Markets don't like it, and the reason why they're responding the way they are is because European leaders are saying, "What are you doing? You're not just taking Greenland." Actually, you know what? Greenland is icy. Did you learn nothing from Mighty Ducks 2? And Iceland is green.
Yeah, it's the opposite. But Iceland does have ice too, though, right?
Okay. Well, anyway, for the European countries that are standing in the president's way, we're talking about a 10% tariff, and that's going to be increasing to 25% on June 1st. So wait. So he's trying to purchase a country. Okay. I guess that's what he's doing.
Yeah. Listen, give us Greenland or we're going to tax our own citizens. Take that. I don't know if this means anything. It probably doesn't, but I want to read you something that I'm reading this book or listening to this book. It's an Audible. I don't know if it's necessarily a recommendation for you. It's called 1913, In Search of the World Before the Great War. I can't remember who recommended it. Someone on Twitter. And it basically just looks at what the world is like heading into World War I. And looking back with hindsight, you think, man, it was so obvious that this was going to happen. Like all these countries were like gearing up and they just wanted to fight. But this book kind of takes a contrarian take of, if you look at what was actually going on in these cities, you wouldn't have ever thought this was going to happen, right? It wasn't as clear cut as you thought. And it was just like, the whole point of the book is like the world order shifted over the next 30 years in ways that weren't possibly imaginable in 1913. He goes through all the different cities, what was happening in London and Rome and Berlin, and like the stuff you hear, it was like you could travel as a German citizen to the UK without a passport. And it was like open borders, and it was kind of like not what you'd think, because the world got more insular after that, obviously. So listen to this. It's kind of long, but I think it's worth a read.
All right, you have my attention.
A European could survey the world in 1913 as the Greek gods might have surveyed it from the snowy heights of Mount Olympus, themselves above, the teeming earth below. To be a European from this perspective was to inhabit the highest stage of human development. Past civilizations might have built great cities, invented algebra, or discovered gunpowder, but none could compare to the material and technological culture to which Europe had given rise, made manifest in the continent's unprecedented wealth and power. To be a European man in particular, was to see oneself at the center of the universe from which all distance was measured and against all clocks were set.
Mm.
Replace the date, replace the name, and you're talking about the US today. Okay? It was just interesting to read and not it always seems like the world order today is set and you kind of have the recency bias of course the US is going to be the leader forever, right? And I'm still wildly bullish on the US over the long term because I think we have tons of built-in advantages and such, but I just don't think that I think we just can't take for granted the fact that we have the position of power we do, and I don't think we should abuse that power.
Agreed.
And it's funny because people have been saying like the fall of the Roman Empire for US for decades now, but it already happened in Europe. Europe is the example of the fallen empire, and I feel like people don't ever talk about it. Like that was the Roman Empire that fell.
Yeah, I'm not worried about American exceptionalism or our advantages. I think these things move at a glacial speed. And also, it's not to dismiss the position of power and privilege that we have and treating our trade partners and our allies this way and leading for abusing this power. It's not good.
But you know what do you call it? The sort of counterbalance there is the financial markets. Like if things get taken too far, the bond market starts selling off and yields spike higher and the stock market sells off, that's the transistor there. Like that's the thing that's going to, don't you think that's the one that's what saved us from having those tariffs that could have been so bad in April. And people say, well, it was a negotiating ploy or whatever, but the financial markets I still think are the arbiter of like putting a ceiling on some of these things.
Yeah. How did you get the how did you clip that section? Because I've tried to like Google like how do you I'm listening to an audiobook. It would be cool if I could like read alongside of it or clips. How did you do that?
Yeah, so you hit the clip button in there. It's like 30 seconds long.
Oh.
But honestly, after this, I liked it so much. I bought the Kindle too. You should get a deal on the Kindle if you buy the Audible, right?
So when I'm listening to an earnings call, it's very nice to be able to listen and also see the text while you're listening. It's like subtitles. And if your eyes scroll ahead and you're bored, whatever, you just jump to the next part.
Audible
Not that I want to do it with a book, but
Amazon, give us a call. All right, so maybe these things are one and the same. Like what matters more right now? And it's kind of funny to say like the markets are like having volatility because we just hit an all-time high last week on Friday, I think. So it's like, okay, we have one down day. So is it Greenland or bond yields? And maybe these things are interconnected. But I saw a bunch of people posting the Japan yields this morning. Here's one. Japan's 30-year yields rocketed 26 basis points higher toward 4%. And you can see in this chart, right? Japan bond yields look like they're going vertical. It looks like a chart of gold or Bitcoin or something crazy that's going up. Now, here's my question as a macro tourist. Okay? For 30 to 40 years, Japan's bond yields were on the floor. Okay? Couldn't go anywhere. They were really, really low. And their economy stagnated. So why isn't this actually a good thing? Because the yield curve is steepening. Listen, this is a total tourist question. And obviously the reason for the yields, but they're saying, hey, listen, their yields are soaring because they're going to cut taxes. Isn't this they're trying to grow the Japanese economy? Isn't this a positive sign?
Two things. I have no idea what's happening in Japan.
Yeah, I'm a total macro tourist, admittedly.
So I couldn't even begin to tell you. But like the opposite of bad is not good always. Right? Because this is another extreme. So if shorting Japanese bonds used to be called the widowmaker because surely they had to go up and they just didn't.
Yes.
But all right, zero is bad, but vertical is not good either. I mean, this is not like a slow and steady creep up. Like they're going straight up. And when government borrowing costs rise like this, I don't know. It's not a good thing. Like government bond yield going vertical is never good.
That's fair. The opposite of good is not bad. I have to think about that one a little longer, but I think you're kind of right, maybe 47% right. Okay, so Kevin Gordon posted a picture of the U.S. 30-year Treasury, and it's not going vertical; it's going up. But this is the kind of thing where I'm gonna be like the Titanic captain going down with the ship on this. Like if bond yields in the U.S. go up and down and up and down, I feel like every time they go up, people really worry something wrong is going to happen. And I'm always poo pooing this because I think unless like they really spike in a meaningful way, I'm not going to worry about them just going in some range bound pattern. I'm going to be the
Yeah,
last
I
person to
mean,
worry about this.
yeah, I mean, I would mostly agree with you. Like but it does seem like every time they get up here, at least in the past 2 years, they've come back down.
Yes.
What if they shoot past 5%? Let's just imagine that there's technical analysis on yields and they're at like 5.5%, 6%.
The
You still
weird thing, the weird part about it is that inflation keeps falling. So bond yields are rising while inflation is falling. So I guess what that would tell you is it's investor positioning that people are selling treasuries.
Well, I think it's just I think it's political instability.
That's what I
And I
mean.
think that's obviously why like gold is gapping up higher this morning as are all precious metals. I just keep wondering like why isn't the dollar responding? Like why aren't they selling dollars if all the hemming and hawing is over
The
political
two true
instability?
currencies aren't moving. Bitcoin not moving either.
Well, Bitcoin's going down. I know you're kidding, but um
No, but I still think the fact that we're seeing this political upheaval and gold and silver are the ones reacting and not Bitcoin is an interesting development. Very interesting in my opinion. I wouldn't have guessed this. If you would have told me this a couple years ago, hey, this is all the stuff that's going to happen geopolitically, which one is going to spike, gold, silver, or Bitcoin? I would have said probably Bitcoin, and I would have been wrong.
mm,
Don't you think this is just another one of the narrative violations of Bitcoin that it was supposed to be the anti-system play, and it's not
yeah.
acting like that.
No, it's risk on, risk off, at least for the most part. Maybe it could change one day, but has not yet. You're right. All right. So yeah, let's talk about the stock market.
But hey, listen, in 6 months, this Greenland stuff that like is it going to matter? Probably not.
I mean, I hope not. I'm not taking this like threat seriously. Maybe I should. I don't know. The idea of just taking another country seems completely preposterous.
Yeah. That's
Right?
that's why
We're just taking countries. Okay, like for what?
I don't
I'm at a
one of those
loss.
it's another one of these things.
I was watching the Knicks. I took my family to the Knicks game yesterday, and the Knicks are just completely unraveling. And it's one of those things that's just so confounding. I don't even know where to begin. Like my friend and I were texting. We're at a loss. I don't even know what to say. What happened? The wheels fell off so fast. I'm genuinely like, I don't even know what to say. What's happening? And I feel sort of that way with what we're doing now with Greenland. Like, is this
The Pistons sucked all your energy out. Admittedly, I'm not watching NBA regular season basketball yet. I there's too much football on for me to care about.
the
NBA
Knicks are
yet,
not the
but
point? But the point is
right.
like I don't even know what to say. It's just deep breath in, deep breath out. Okay,
on.
this is a good chart. From Apollo. So we've obviously looked at concentration in a million different ways, right? I've never seen it though done this way. So the chart that they made is the combined weight because we've had periods of time where there has been concentration. The last time we saw extreme concentration, like just two stocks, was it AT&T and General Electric or AT&T and General Motors? I can't remember.
General Motors, yeah.
Okay.
AT&T was like 12% of the total or something. This is like the 30s, and General Motors was like 10. It was a high number for those two, yes.
So we've seen concentration before, but we've never seen it like this, where he's looking at the combined weight of stocks with a 3% or more weighting in the S&P 500.
The combined weight of weight. Okay.
Right?
Okay, I got it.
So now this only goes back to 95. And I'm guessing because if you take it back farther, it's less radical.
So this is Nvidia, Apple, Microsoft, Amazon, Google, probably. Like probably those five, I would guess. Let's see. Yeah, those are the ones with 3% weight or above. Those five. And
So
that's
those five are
30%
30% of the market. And interestingly, we've been doing a lot of Matt's been doing a lot of chart work on this. The Mag 7 versus the 493, like the ratio, it's breaking down. Meaning the Mag 7 have been underperforming the rest of the market on a relative basis, which I guess like tell me in 6 months. I'll tell you in 6 months whether that was good or bad. But I like the idea of passing the baton, giving some other
Speaking of
Other
which,
stocks,
I've
chance.
been floating this theory out to you for the past few weeks a little bit. Are small caps of 2026 the international stocks of 2025? So this is from the Wall Street Journal. Small cap stocks finished week at records. Friday marked the 11th straight session of the Russell 2000 beating the S&P 500. The Russell is up a lot more than the S&P and the Nasdaq this year.
That's weird. 11 straight sessions.
It's a lot, right?
I'm gonna ask Matt to chart this.
So they're talking about like you said, the rotation trade, and it says, buoyed by robust GDP growth and strong corporate earnings, investors have been shifting from mega cap tech stocks in favor of stocks poised to benefit from economic reacceleration, such as industrials, energy companies, and small caps. And this is the kind of thing that in 6 months, why the geopolitics stuff doesn't matter. If earnings are still going gangbusters and GDP growth is strong, no one cares about geopolitics, not in the markets. Okay. Look at the Russell 2000 chart. This thing is taken off, right? And if you look since the bottom, now this is another surprise because it was surprising that international stocks outperformed last year in the big AI trade from the bottom of Liberation Day, which is April 8th. Okay. The Russell 2000 is now beating the NASDAQ 100 and beating the S&P 500. It's up 53% from the bottom in April. More than large cap stocks, which again, I think is surprising given the fact that this is an AI only market and there's so much concentration and they're spending all the money and they're such a big part of GDP. I think this would surprise some people.
Yeah, me too. Here's another going from Apollo.
Hang on though. The thing is, I think one of the reasons you hope small cap stocks are going to outperform is because rates are going to fall. So I guess bond yields rising could be the thing that derails this. Because that was the hope, right? That small caps got hurt way more because of rising rates because they borrowed those higher rates and the big cap didn't have to worry about it because they already locked in lower rates before.
Yeah, but the long end of the curve is really what's steepening. Like they're not borrowing it for 30 years, so I think they're less impacted by that.
True.
Um,
The year of small caps. Mark it down.
yeah, I'm bullish on small caps. The Russell 2000, I think 60% of the index is negative earnings. Is that about right? It's a large number. So Apollo breaks down the performance since I guess since Liberation Day lows or April 2025. I'm not sure why they use that date, not even the lows, whatever. Companies with negative earnings per share have beaten the crap out of companies with positive earnings per share in the index.
Which is funny because that's the thing that, because if this really, because people always throw this stat out, right, about the negative earnings. Like if you wanted to just own the higher quality companies or own like a value ETF, right, or a high
Or
quality
the
or something.
no, the S&P 600.
Yeah, or the 600, that it's more high quality. It takes out those negative earners. And you would have been wrong, I guess.
So even though the Russell has performed well since Liberation Day lows, it's underperformed dramatically for the past couple of years. So since the peak in November 2021, it's only up 16%.
So I look at this as a positive.
So it's gone like 4 years
yeah.
of sideways to nowhere. So since the November 21 peak, the S&P is up 57%. The Russell is only up 16%, which is, I don't know, what is that compounded? 3% a year? Whatever. It's nothing. It's done terribly. So I agree with you that this could easily be the beginning of a bigger move.
It's like, why did international stocks outperform so much last year? Part of it was a dollar, and part of it was they were so beaten down. It didn't take much good news for them to come back.
So look at this next chart that Sean made. All right, so this is the annual returns for the S&P versus the Russell 2000. And the last time the Russell 2000 outperformed was 2020 by a cent. I mean, by like barely anything. It's gotten destroyed almost every other year since 2016.
Yeah, you're right. If anything, you hang your hat on like it's due, right?
It has been a minute.
Okay, Greg Ip at the Wall Street Journal. Here's the headline. Trump wants to run the economy hot. There's a good chance he'll succeed. All right, so he's saying Washington has 3 levers to affect growth: fiscal policy, monetary policy, and credit policy. And credit policy is like borrowing, the ease of borrowing. And he's saying historically, these 3 things have not been coordinated. He's saying now they kind of are. We're spending a lot of money still. We're reducing rates for monetary policy, and we're trying to ease credit. So he's saying, listen, like with those things, typically, like he's probably going to succeed to run the economy hot. Like that's
So let me
why
ask you a question.
GDP now is like 5% for this quarter.
Zooming out in terms of like how we're thinking about the stock market in 2026. On the one hand, you have an accommodative backdrop, like you just mentioned, right? From central banks to the government to the AI tailwinds, and that's a very important thing to consider, obviously. On the other hand, you have investor expectations, earnings per share expectations, pretty high on both sides. We showed the chart last week of ETF flows. Like investors are obviously excited, as they obviously should be. Ipso facto, are they too excited? And this is the type of thing where it's like you can, the scene in Princess Bride, right? You just spin yourself in circles. Like, yes, things are good, but everybody knows it's good. And then I think generally that line of thinking is too cute. At the extremes, fine. When everybody's like jumping over themselves to raise price targets and truly going like nuts on speculation, then I would say, all right, guys, like this is silly season. It's not silly season. Just if you just look at the prices of things that we're talking about, it's not silly season at all. It's just not.
I'm gonna have to update this, but I did this thing once where I looked at how often earnings are up in a given year, but the stock market is down, or earnings are down and the stock market is up, and it happens more often than you think in just 1 year period, right? And obviously, the trend probably matters more than anything, but it sure is possible that expectations, and I think expectations more along the lines of just returns have been so good. That's the only thing for me. But yeah, if you look at this stuff with the economy, it's hard to think that like things are going to roll over immediately and all of a sudden go bad, and tech companies are all of a sudden going to pull back.
I listened
From
to so Josh and I are going to do some financial stuff on what are your thoughts tonight. So I was looking at Bank of America's report this morning, and to me, they are the source of truth. Like when I want to know what's going on, what's really going on with the U.S. consumer, I don't tell me about like Dollar Tree or Target or these retailers because it's a very competitive market. There's all sorts of different forces that are at play. I go to the source of truth, and for me, that's Bank of America.
so hang
That
on.
is
So my wife's source of truth now is ChatGPT. Like if I tell her something, she won't believe me until she can cross reference with ChatGPT. She believes everything AI tells her, right? She thinks that ChatGPT is just wonderful. Uh, for you, that's credit card companies.
it's Bank of
Like
America specifically,
okay, that's the
right?
one.
They are the bank from Main Street.
All right, so here's what they're going to tell you probably. So this is from our friends Ryan and Sonu at Carson Group. So they said, Ryan says, household balance sheets are in the best shape they've been in since check notes ever. He said, yes, there's a lot of debt, but there's also a lot more equity. So what they did here is they broke down all the assets and all the liabilities. And they looked at going back to 1999, 2007, and 2019, kind of like some prior peaks. And they look at the asset percentage to the liability percentage. And it's like, yes, the debt has grown, but the assets have grown even more. So even it's kind of crazy that we're in household balance sheets are in a much, much better place from an asset liability perspective than they were in 1999. And the 1990s are still widely considered one of the great economic decades in history for good reason. And consumers are in a much better place now than they were back then. This is assets and liabilities and net worth as a percentage of disposable income. Consumers are in a better shape now than they were in 1999.
Amazing.
It's kind of crazy, right?
So there's a great Charlie Munger quote when we're thinking about assets versus liabilities. And yes, the numbers are reality. I love the quote where he says, the liabilities are always 100% good. It's the assets you have to worry about. And so when we're talking about debt and interest rates and what's the breaking point, it's not in a vacuum, right? With asset prices this high, yeah, things look pretty damn good,
You're right. That can easily shift with a bear
right?
market or whatever.
Yeah, like if the assets are 30% lower because of a recession or bear market, then everything is different because the liabilities don't change. But getting back to Bank of America, their net charge-offs. So they break it down through the consumer, credit cards, commercial properties, and consumer net charge-offs are going down, and they have been consistently.
All right, so you're gonna give us the full breakdown next week.
No, I'm going to do it on one of your thoughts tonight. I'm just saying, like, if things are fine according to this one source of truth. And it's not to say everything is fine always and everywhere. Obviously, there are pockets of stress, as there always are.
Hey, no, last week you wanted to survey each individual American and ask them how they're doing before we realized things were good. Now you're going back to macro.
No. I think that when you are talking about real estate, you are like acting as if there's one buyer. And do they regret? It's like, come on, I will push back against that for the rest of the time. I'm sorry. Those are not the same thing.
All right. We need to offer mea culpa. Maybe you do, actually. You want to read this? We had a few people write on this. This was a good... Sure. This was good because I guess we didn't read this chart right last week. So this
is great. So last week we shared a chart for Apollo did their update on real estate. And the title of the chart is Freddie Mac Serious Delinquency Rates Multifamily. And this is significantly higher than during the GFC period. And obviously that's nerve-wracking. So we called it out, and two people actually were kind enough to check us in the inbox. Somebody said it's the multifamily loans. So multifamily delinquency rate information is based on the UPB I'm not sure what that stands for, of mortgage loans that are 2 monthly payments or more past due or in the process of foreclosure.
Unpaid principal balance.
Okay. You guys talked about this as if this is the renter delinquency. It is not. So I had ChatGPT. I uploaded this chart and I said, like, explain to me exactly what's going on here. And the TLDR from Chat is this is not renters falling behind, which is what we thought it was. It's apartment owners who borrowed aggressively in a low rate world, now struggling to service and refinance their debt.
Because rents are falling.
Two very different things.
Right. And I'm guessing one of the reasons is because rents are falling in a lot of places. And so you're right, people went hog wild building apartments. I think it was like all-time highs for apartment building because rates were so low. So this makes sense.
So speaking of Freddie Mac, my book habits, and not just with audiobooks, like this is when I was like aggressively reading back in the day, I would like fixate on a topic and I would squeeze all the juice that I wanted to squeeze out of a topic, and then I would move on to something else. So part of, it was like the presidents, and then it was history, and then this, and then that, whatever. So right now I'm revisiting the
your middle age when it's World War II.
I haven't done that yet. I know that I'm saving that for retirement. Who has time for that? That's a bear. So I saw, in light of the credit card proposals, Modest Proposal tweeted, like, read All the Devils Are Here for unintended consequences. Funny enough, I think All the Devils Are Here, that's Joan Osara and Bethany McLean, that actually might be the last book that I stopped reading. Whenever I stopped reading, I think I got through half of that book, and for no good reason, I was just like, you know what, maybe COVID happened, I can't remember. But that is a book that I enjoyed, and I like got a third of the way through. So I said, you know what, great idea, let's revisit that book. So I just finished it.
Are you sure you got the name right? All the Devils Are Here?
Is that not the name of it? I get names wrong all the time. It could be wrong.
Oh, nope, you're right. All the Devils Are Here. The Hidden History of the Financial Crisis. Okay.
I
never heard of that one.
So from there, I'm listening now to Andrew Ross Sorkin's book, Too Big to Fail. Never read that one. And then I'm going to finish. I think I'm probably going to do one more. I'll probably do
You're going back to the GFC?
I don't know why. I feel like I know we did that already. I did that in like 2012 when those books came out. But I'm doing.
I honestly felt like The Big Short was the only one you needed to read.
Yeah. I mean, yeah, so good. So anyway, it's a reminder of the time period that we lived through and how completely upside down the world was, and the literal, not just liquidity problems at the banks, but the utter insolvency of them.
I've said this
the stark contrast of where we are today versus people looking for the next big short. Are you out of your mind? The financial system almost came under legitimately.
It was scary. I've said this story before, but it's worth repeating. We had a hedge fund client we were invested in a hedge fund, and we were on a call with them, and we had calls all the time. Like I got a new job in July of 2007 for the endowment fund I work for. Like right as the credit stuff really started bubbling up, like one of those credit funds blew up, and so in the September of 2008, when everything was blowing up, Lehman Brothers went under. We had a guy on a Friday say, "Go to the ATM right now, get as much cash as you can because Monday the banks might not open." He was dead serious, and that's how
Muhammad said that. I think Muhammad said that at one of the conferences that we saw him speak at. Like
it
that
was. It was and it was a real thing. It wasn't like that wasn't hyperbole. Yes, that was a crazy, crazy. And honestly, for me as a young person in finance, experiencing that, it was like I think one of the best things that could have ever happened to me. Because I saw like people losing their minds and blowing up left and right, and like the unintended consequences of the aftermath of that. It was such a good learning experience for me. Okay, is AI going to make money worthless? This is a piece from the Wall Street Journal. Why the tech world thinks the American dream is dying. The argument some people are putting forward is that tech companies and their leaders become a class under their own infinite wealth. No one else will have the means to generate money for themselves because AI will have taken all their jobs and opportunities. In other words, the bridge is about to be raised for those chasing the American dream, and everyone is worrying about being left on the wrong side. And they interview some people who like have these thoughts, like, "Hey, listen, AI it's going to be like Star Trek." Like, I'm not a Star Trek person, but I know that technology basically solved everything. So that's why they could explore all these lands and like it could make anything you wanted. And there's some people in Silicon Valley who are saying like this is legitimately the last time to get wealth, so get it now, otherwise it's done.
Can we just pause on the Star Trek thing?
Mhm.
Star Trek was like one of the biggest shows ever at the time.
Yeah, I don't think I ever watched a whole episode. Probably.
I think like yeah, like maybe like our dads watched it. I have no idea. We don't know how good we have it these days. People used to have to watch Star Trek. Like that was what a lame show for nerds, but like that was what it was. No offense to all the Star Trek fans,
on
but
that one. I have a new analogy for AI because, like I said, my wife all the time will do something on ChatGPT and she'll be like, "This is amazing." She's like, "I can't believe how good this is." But I think AI is like Rain Man. You know, in Rain Man, when they're at the doctor's office and they're giving him math problems like, "What's 3,612 times 4,213?" And he's like 5, 7, and he says all the and then Tom Cruise is like, "Oh my gosh, he's a genius." Then he goes, "Ray, what's 2 plus 3?" And he's like, 7. That's AI. Because every time I ask it to do something simple, it can't do it. Look at this chart here. I did another one where I tried to do the history of the S&P 500. And it kept giving me the same years twice, 1976 or 1987. And then I'd say, "Hey, stop giving me the same years twice." And then it would mess up the word financials or the word utilities. I don't understand. Someone has to explain to me who's smarter than me. Why is it so hard for AI to do simple tasks, but it can do these monumentally difficult tasks so easily? I don't understand.
I'm pretty sure whoever emails us an explanation, the explanation won't make sense to us.
Probably, but there has to be a good explanation. Like I just want to know, why can't it do simple stuff like this?
Somebody emailed us that you guys are using it wrong. You have to ask it specific questions in a specific way. Like tell the machine that you are an analyst that's looking for X, Y, and Z. Like you can't just ask a question. You have to like frame it in a certain way. I don't know if that's true or not. I haven't played around with it enough.
Okay, that doesn't make sense to me either. But okay, I don't understand why it can't do simple tasks. It's
So
totally it's Rain Man.
I finally started taking out all of my photos and things to hang on the wall. We were home yesterday for MLK Day, and I said, "You know what? I finally have a minute. Let me take the bubble wrap off. Let me."
Wait, can you actually hang stuff yourself?
No,
AI can't help you with that.
no. I mean, I can, but Robin won't let me, and she's probably right because I won't get them straight.
Okay.
So, I mean, yes, I can hammer a thing into a wall. I
But
can't.
hang on, not to totally derail your story, but we had all of our walls painted and we took everything off, and even like the toilet paper holders, you know. And I'm like, let's get new ones because the kids mess them up and stuff. So I told my wife, like, "I'll put these in. I know what I'm doing. I'll install these." So I put the toilet paper hangers in.
I don't know how those hang. It's like magic. Like, how do they? Because I know exactly what you're talking about. How do they go onto the wall? What's keeping them there?
You put these. There's like drywall holders, and so I did it. And within a month, all of them were like, they all fell down. Like it was just a straight line, you know, and they all fell down. And I had to find the stud, and I had to redo them all.
I hate toilet paper holders. I just hate all of them. I just hate everything about them.
All. Okay. Yeah. Hanging stuff on the wall.
Anyway, so I took them all out and I told Robin that that I was going to take pictures of all of them, take pictures of my wall, and have the computer lay them out for me, which I know it could do that, right? It could do that. I didn't even get that far. She told me to stop right. She said, "Stop right there. Don't do anything."
That's
So
the
I
thing.
didn't.
It can give you the layout and give you all the measurements and stuff, and it's harder than it. So what are you gonna do? Hire someone to hang your wall pictures?
Yeah, I have a handyman, Mike.
Okay.
Yep,
Do you think he like laughs to himself internally, like this schmuck can't even hang stuff on the walls?
Mike's a great guy. He doesn't overcharge me.
Okay.
He likes to talk stocks with me. So nice guy.
All right. Can we talk? Can you explain to me the crypto stuff with Coinbase?
Oh
Uh,
no, matter of fact, I can't. I can't.
okay.
I have not read a single thing about it. Coinbase did something to piss off the administration. I'm going to read it. I just haven't got it up to speed yet. Could you tell me anything about it, or we're both ignorant right now?
I read the story Josh posted for us, but it just said Coinbase didn't like because it could impact their stablecoin yields, and it sounded like everyone was mad at Coinbase. So I don't know. I thought maybe you were plugged into the crypto. Maybe someone can fill us
Uh,
in. Okay.
I will get plugged in. I just haven't read it yet. All right. This is news. Oh, the markets are open. All right. So S&P is. I mean, the equal weight's down 80 basis points. S&P is down 130. I mean,
The
whatever.
Russell 2000 is positive. Am I seeing that right?
No, you're not seeing that right.
Okay. I'm on it.
The Russell is down 1%. Gold is up 3.5%. Holy moly. Silver's up 6%. The VIX is the VIX is at 19. This is nothing. But
I never thought we'd see another gold silver bubble in my lifetime.
I bought silver when it was $50 in 2011. I said this to Josh. Maybe I haven't said it on this show. I bought silver when it broke out at like $36. And I think I sold it at like 42, and I felt like a genius.
What is it now?
85 or 86.
All right. Not a silver trader.
Okay, this is news. The New York Stock Exchange today announced its development of a platform for trading and on-chain settlement of tokenized securities, for which it will seek regulatory approval. I'm guessing they're going to get it. NYSE's new digital platform will enable tokenized trading experiences, including 24/7 operations, instant settlement, order size and dollar amounts, and stablecoin based funding. 24/7 instant settlement. Okay,
I know that's
let's
when
do
people
it.
will probably. I think instant settlement is probably the biggest thing for a lot of people, right?
Dude, I transferred money to a custodian on Monday. And I need to transfer it back out, and the money still hasn't settled. How is that possible? Monday of last week.
I did a custodian to custodian transfer. I think I put it in motion before the end of the year, and it just settled last week. It took like 6 weeks to happen. It took forever, really long time. In like an
Let
in
me just
kind
see
transfer of
if
securities.
it's settled yet. Transfer. Now I could trade it. I don't want to trade it. I want my money back. Nope. How is this possible? It's been over a week.
So the funny thing is that that's going to be the benefit for people, but then people are also going to say like, "Wait, this happened way too quick. I didn't mean to do it." That's going to be like the
I don't think
downside
people are
look
going to
for.
complain about things moving too quickly.
All right.
This
You're
is
wrong.
the opposite of bad is good in this case for the most
I don't
part.
like 24/7 trading, but the other stuff is fine with me. All right, let's talk housing. From Axios, the share of US mortgages by interest rate. And they look at 6% or higher versus 2.9% or lower. And 2.9% or lower was it was almost 25% of all mortgages in 2022, and the share of 6% or higher was less than 10%. Now the share of 6% or higher is more than those with 3% or lower. So like the world is healing, I guess, getting more normalized for mortgage holders.
Mm.
I think this is actually a positive for the housing market because it means fewer people holding on to those 3% mortgages and more people who are willing to trade and have activity, correct?
Oh, I see what you're saying. Yeah, it could be.
Sorry, do you hear that drilling in the background? I have
I
no
do.
idea
What
what's
is
going
that?
on. I have no idea. Maybe someone's hanging pictures on their wall. All right. From the Wall Street Journal. Gen X and millennials will inherit trillions in real estate over the next decade, and they look at this through the lens of luxury real estate. But I think this is going to be a huge story for just everyone. So over the next decade, 1.2 million individuals with a net worth of 5 million or more are projected to pass on more than $38 trillion globally. Gen Xers and millennials will inherit $4.6 trillion in global real estate over the next 10 years. 2.4 million trillion of that is in the US. And they look at all these different like wealth transfers by net worth. Um, they said Americans with a net worth of more than 5 million are expected to pass down $17.3 trillion over the next decade. Uh, it's going to be a lot of money changing hands. And they talk about how a lot of rich people are trying to figure this out and get ahead of it and make sure their kids are okay. And um, I just think it's going to be it's not going to happen all at once. Obviously, it's going to be a slower. It's not going to be a giant tidal wave. It's going to be a slower, tide coming in and coming out.
This is like the 10,000 baby boomers retiring every day story.
Yeah,
It's going to
yes,
play out.
and
to the
obviously
next.
people have been talking about the great wealth transfer for years because they can see it coming. But like, what segment of the economy is going to have the biggest is going to feel the most from this? I mean, because I think there's going to be upheaval with financial advisors, right? Hey, my parents use this person. I don't want to use them. I'm going to change over. There's going to be a lot of that, I believe.
Mhm.
I think there's going to be probably a lot of young people who go, I would rather have the money than the house. I don't want this house my parents lived in. What am I going to do with it? Unless I move in, I'm going to sell it. I think that. So I think there is going to be a lot of change because of this wealth transfer.
Yeah.
Like, what do you think it's going to mean?
Um.
We've never had a group this large with this much money live this long before. We've never had this before. This is a totally new thing.
All right. Let me make a lame. What do I think is going to happen? Prediction. Nothing. I think it's going to be so slow and gradual that these people are going to be transferring real estate, aka dying, over the next 30 years. So I don't think that we're going to wake up one day with like, oh my God, there's so many homes for sale because unless we have like another COVID situation, and even still that did nothing, God forbid. But I just think that it's going to be like a sort of boring, slow and steady thing. And I guess the biggest impact is going to be the rich get richer.
Yeah, you're right. And I think that's the hard part is people think like, well, the rich are all going to sell. People are going to sell their assets all at once when this gets transferred down. No, it's mostly going to be rich people giving the money to the rich kids, and they're not going to sell anything.
Well, they'll sell their homes.
Yeah, but I'm saying like stocks and stuff, like financial securities. That stuff is not going to like see a big wave of selling because of this.
No, I don't think so.
Yes, but I do think hopefully that will unlock some houses for people to buy in the years ahead. That a lot of people aren't going to want their baby boomer parents' houses. They're gonna want to get out of them and just take the money.
Well, we don't have to guess because you can just see this in the demographic data. There are more people that are going to be of home buying age than there are of people passing away and unlocking real estate. Like it's still going to be way upside down. The demand supply imbalance.
I also don't think we're prepared as a society for the level of death we're going to have in the years ahead. I know that's a really morbid thing to think about, but just the transition that happens. I saw this with my brother. The amount of things that need to happen when someone passes away with their accounts and their money and their everything about them. It's not so I had a conversation with my dad right afterwards and said, I'm not prepared for like you and mom someday. Like we need to sit down and have a discussion because I did it with my brother. And so like at the holidays, my dad handed me this envelope. He's like, here's everything. Here's our passwords. Here's our accounts. Here's if something should happen to me and your mother's by herself or to both of us, like, and you need to know where everything is. Like, I don't think how many people are having those conversations?
Very few.
Probably not many, right?
Yeah, no, it's not a fun
It,
conversation.
it
to
makes
have.
like a messy situation. Yeah, it's not fun at all, but it makes like a bad situation even worse when you have to deal with all that stuff and like sort
Yeah.
through it all on your own,
Yeah.
Especially since everything in the past, you could go through someone's filing cabinet and find everything. Now everything's online. And if you need to get someone's password, it's through their phone or they have to like on them. So
Yeah.
it's much harder to get that stuff these days.
Yeah. I remember having that conversation with my mother. I was probably 23. I mean, I was completely emotionally unequipped to have that conversation, and it was not fun.
Yeah, no, it's not at all. But
Yeah.
like having ahead of time. All right. Getting out of wealth. Citadel Securities had a good piece here. I think Mev shared this in the Idea Farm. Now I have to request Citadel, whoever's making their charts. Listen, that's a huge organization. They make a lot of money for people. They need to increase the font on their charts. You see how small the font is on these things?
Can't read it. Yeah.
It's comically small. And so they look at household wealth by percentile group. So they're looking at the top 1%, the next 9, the next 40, and the bottom 50. Okay. And obviously the top 1% holds most of it. The top 10% holds most of it. We know that, right? I think the top 10% is like almost 70% of the total. But they look at the growth in household wealth by percentage. This is something we've talked about. And this is since 2012. By far the biggest relative gainer is the bottom 50%, who's seen their wealth rise by almost 1,200%, versus call it a 150 to 200% growth for the rest of the group. Now, part of this is probably when they chose to start this, because that was the kind of the bottom of the housing market. So that bottom 50% got dinged the most then. But if you look at the ownership of equities too, the biggest growth since the 2010s is in that bottom 50%. Their ownership of equities is up almost 500%. It's a massive jump for the bottom 50%. And obviously it's still a tiny amount, relatively speaking. I still think this is one of the best outcomes of the 2020s. The fact that the bottom 50% has been brought more into the financial markets.
And the last one, the household ownership by age group, people under 40.
Under 40 is again, the biggest thing. We've talked a little, but these are good charts here. As long as, Citadel, talk to Chart Kid Matt about the font. The font got to be a little bigger. Good charts.
It's funny that the narrative of Robinhood over the years has shifted so dramatically.
Right?
They were the bad guys, and now, in some people's opinions, they're the good guys, or maybe it's not bad or good. It's shades, but they did this. Like this, they didn't cause the pandemic, but like they were, right place, right time. But
another weird outcome of the pandemic, though, right? Like, who would have ever thought we're going to have a pandemic that's going to keep people in their houses? It's going to be an awful situation. What's it going to do? It's going to lead more people to invest in the stock market. Who could have ever predicted that?
Yeah. Speaking of predictions, my Seahawks not winning the Super Bowl prediction is not looking so hot.
Man, I've gotten a lot of notes on that lately.
So I made that. It's hilarious.
Daniel,
really
you got to pull the clip on that. Michael saying, "Listen, the Seahawks aren't winning the Super Bowl.
So
not going to happen."
I made that prediction in week 16, I believe, or 17.
Wait, are you still holding on to this bet, or did you sell out of it?
Yeah, I'm still holding.
Okay, I think you have to hold. At this point, you have to. You have to hold.
So
the Super Bowl.
I could take a 40% loss, which is whatever. It's funny.
Remind me, what's the payout if the Seahawks? Let's say they lose in the Super Bowl. What's the payoff if you win?
So I might. Okay, I bought. So it was 86 cents for no, and I'm thinking when I did it, like, this is a 14% return. Forget about. I wouldn't make the bet if it was minus 800 or whatever it translates to, but I like 86 cents. Like, that's a 14% return. It's free money. It's a no-brainer. They're not going to win. And then they destroyed the Niners on prime time, and I felt a little pit in my stomach, like, uh-oh, they look really good. And my whole thing was like, Sam Darnold's not winning Super Bowl. They don't need Sam Darnold to do anything. Like, they're just so dominant. I do think that the Rams could beat them. I really do. But am I? So anyway, I have way too much money now against the Seahawks, and I want out. But
predicting the future is hard.
I want out. Yeah, predicting the future is hard.
Yeah, I mean, there's some injury luck in there too, but yeah,
Karma has bitten me in the butt cheeks a few times recently with the Seahawks and the flu and Delta. So a couple of weeks ago, we were talking about Delta's earnings, and you were like, either you or Josh said, like, why is Delta so much better than every other airline?
Yeah, that was me.
Okay, and I was like, I don't know, but like, I only fly Delta, and I've had nothing but awesome experiences. Like, I've flown a lot in the last 3 years, and I've had like one delay. I had a really bad experience on Thursday. So on Thursday night, I made the quickest trip of my life to Los Angeles. I was supposed to land at 11 o'clock, client meeting the next morning, then be on a plane out at 3 o'clock the next day. So in the air almost as long as I was on the ground. And for whatever, they gave a reason. I don't know what it was. The wrong plane was at the gate, whatever. It was like a 2.5 hour delay. Didn't land
on the plane or waiting in
no,
the
thank
terminal?
God.
Okay.
But like, it was not pleasant. People were getting anxious. It was late. And then to add insult to injury, I love Delta's airplane. I love Delta's movies. In fact, I think didn't we hear from the person that chooses the movies?
I think
I can't remember if it was on Delta. What a cool job.
Mhm.
This movie selection stunk. Or maybe it's not to brag. I've just seen too many of these movies.
Yeah.
I watched The Conjuring Last Rites. That movie was such a pile of shit that I turned it off with 10 minutes to go. And there was 10 minutes left. I said, I don't want to finish this.
That's a lot. Okay. Speaking of movies, Friday night I pull up Netflix. What do I see? Oh, there's a brand new Matt Damon Ben Affleck movie. I forgot this was going straight to Netflix. That's one of the beauties of streaming. You can just turn on Netflix on a Friday and be like, oh, there's a brand new movie with Hollywood stars. So they've been making the rounds. They've got this movie called The Rip. Did you see it?
Mhm.
Okay, we'll talk about the movie in a minute. But they've been making the round. They've been doing the podcast tour. They've been talking a lot. It's funny. People probably watch the podcast clips more than the movie.
Did you listen to Rogan?
I honestly didn't listen to any of their podcasts. I just listened to some of the clips. I haven't listened.
All right, listen to the Rogan interview. It's so good. I'm only
Okay.
halfway done, but it's just so.
So I don't know which one he talked about at this, but this is the quote from Matt Damon that's been flying around. He said, the standard way to make an action movie that we learned was you usually have 3 set pieces, one in the first act, one in the second, one in the third. You spend most of your money on that 1/3 act. That's your finale. And now it's like, can we get the big one in the first 5 minutes? We want people to stay. And it wouldn't be terrible if you reiterated the plot 3 or 4 times in the dialogue because people are on their phones while they're watching.
That was Joe Rogan.
Okay. And that's obviously very sad, but I totally understand why they do this. And this is one of the reasons why every time I watch a Netflix movie, I go, what is it about this movie that just doesn't feel like a normal movie? And that must be it. That they're trying to optimize these to keep people's attention and not like a regular movie. Something about it just doesn't feel like a normal movie. So here's my take on the movie.
This movie sucked.
I watched it. It felt like they sent Damon and Affleck a Gerard Butler script. And they went, you know what? Like it accidentally, like here's a Liam Neeson or Gerard Butler, like straight to DVD movie, straight to streaming movie. And they went, you know what? We get to work with each other again. It's a B- action flick. Netflix is going to throw the bag at us. And then we get to go on the podcast tour and talk about how great we are and how we make Good Will Hunting together. Who cares? Let's do it. Everyone else is getting the bag. Why don't we? That's kind of how this felt. To me, this was a B- action movie. And they were still like, their acting was good in it, but it was,
it sucked. And it was, to me, this movie was sad because it felt exactly like the Netflix movies do. And they all just have.
There was like a half hour of it where I was kind of, when they were figuring out what to do with the money. Because it's like, hey, there's a house with a bunch of money. The cops are dirty. And when they were, for a half hour, I was like kind of intrigued. But yeah, it was just a not good action movie.
Yeah. I had a decent enough time watching it.
I wouldn't, listen.
It's fully watchable.
My take is, was it a good movie? Absolutely not. Did I kind of enjoy it? Yeah, I did. I enjoyed it. I still enjoyed myself.
Yeah, it was fine. It was like moderately fun enough, but like it just was hollow. It just was like dumb and stupid and what is happening, and it felt like a Netflix movie.
Probably like the first scene, 5 minutes in, you're kind of like, oh,
yeah.
Eesh. Okay. So anyway,
and the director is a real director. He did The Grey with Liam Neeson. He did Narc. He did.
You're saying The Grey is a real director? No offense to this guy.
I like that movie.
Okay.
I saw that in theater. Obviously,
I said this could have been a Liam Neeson movie.
It just wasn't good.
All right, we offered a mea culpa earlier in the show. I might have to offer one to you too because I listened to the movie draft on the Town podcast about what's going on in 2026, and you said 2026 is going to be bigger than 2025, and I said no way, you're nuts. And you said, well, the Michael Jackson movie, but here's what's coming out. There's a new Mario Brothers movie, a new Toy Story, a new Avengers, a new Moana, a new Spider-Man, a new Minions, a new Dune, a new Star Wars something, a new Jumanji, and a new Devil Wears Prada. Now, those are all retreads, of course, which to me is like, so they're probably going to make a ton of money.
Well, you've got a big one. Scream 7 is going to be huge. Nev Campbell's coming back.
But hasn't she been in all the recent ones?
Maybe as a cameo.
Okay. This is also kind of depressing for me. Like all the big movies this year are just going to be, so like the ones that I want to see or they're not is The Odyssey and Project Hail Mary. Those are the ones I probably really care about, but it's kind of depressing to me that like, why did they have to make another Toy Story? Why did they have to make another Avengers? It's a depressing state of the movies that this is all we do now.
Well, mostly true. Obviously, mostly true. But can I just offer you some other things that I'm excited to see? I can't wait to see 28 Years Later. I might try and go tonight if I can. Everyone loves it.
Another retread?
Sure, but it's not. Yeah, I guess it is. but it's not like a Marvel movie. Send Help, the new Sam Raimi movie with Rachel McAdams. Have you
It
seen
looked
that one?
okay.
Come on.
I'll wait on Netflix. I'll watch it. Yeah.
Okay. There's one coming out on Friday. Is Glenn Powell in it? He like it looks like Minority Report.
Okay, you're not selling me here very much.
What
on
is the
any
name of the
these.
movie? All right. I mentioned Scream 7. That's not for you, of course. All right. Some more. Ready or Not 2. I loved Ready or Not. Big Ready or Not guy. Mortal Kombat sucks. Oh, they're making a Street Fighter movie. That's going to suck too. Oh, Masters of the Universe. You were definitely a He-Man guy.
Okay, that one's also
You
pretty
had
bad.
you had He-Man underwear. Let's be honest.
I probably had some He-Man action figures. That's if they don't make that like a satire, it's not gonna be good.
Okay. Whoa. There's a new Steven Spielberg movie coming out.
That
with,
one actually looks good. Yes, an alien.
Okay, with Emily
Emily
Blunt. It's gonna be
Blunt.
about aliens. Scary Movie 6. I'm gonna skip that. Supergirl, not for me. Jackass 5. I'm seeing that in theaters. Love Jackass. There's some shit.
Yeah, all
What's the one
respect.
coming
All
out
right,
on Friday?
let's do a story time before we do our recommendations. I got a couple of movies. Did you get either of your kids into wrestling, like WWE? Do they watch any of it?
Mm-mm.
Okay, because I grew up on, Hulk Hogan and Andre the Giant. I think I made it all the way through like Bret the Hitman Hart and Shawn Michaels when I was in middle school. Then I kind of gave up on it because it's like, whatever. So my son, he's very physical. Like everyone's in the winter, he feels like a caged animal because he can't go outside as much anymore. He's like, hey, every night he's like, Dad, let's wrestle. Let's tackle
Hang
each
on, I'm
other."
sorry. The new movie is not Glenn Powell. It's Chris Pratt. It's called Mercy. Have you seen
Okay.
trailers for that?
Yeah, look, okay, you're right.
Looks pretty
Okay.
good. Okay, back to you. Wrestling.
So my son, like he has to be like, he's like, let's wrestle. He loves to like mess around and he's like, let's tussle. Like let's tackle each other and suplex each other. And he loves to wrestle. He can't.
Wait,
so I'm
each
like,
other? He could suplex you? That's impressive.
Oh yeah, he's pretty close. He's gonna be bigger than me pretty soon. So I'm like, oh my gosh, he loves cheesy action movies. I'm like, he's gonna love WWE. So I put on because they have all the old ones on Netflix. So I put on like the what's the big one, WrestleMania. I put it on for him. I used to watch it on pay per view with like the shady lines. Like I couldn't get the actual pay per view, so I'd try to watch it through the thing. And we put it on, and I forgot the matches are like a half hour long. But like 2 minutes into it, I thought he'd love it because these guys are flying off ropes. They're, he's like, what is this? I'm like, it's wrestling. He's like, it's fake. They're not really hitting each other. I can tell. And I was like, I didn't know if I was proud of him or should I be. He's like, I want to watch real stuff. He like wanted to see actual people. And I'm like, oh, I thought you would love this. You hate it. So should I be proud or should I be worried that he just wants to see people actually get hurt?
I don't know.
Because I mean, he's 8 years old and he still halfway believed in Santa this year, even though he kind of said, hey, Dad, Santa's note looks a lot like your handwriting this year. So he wanted to believe, but he still didn't. But I can't believe that he immediately got that wrestling was fake. Like I was still into it.
Yeah,
like
that is impressive. School. That is impressive. Well,
I don't mean to like throw shade at people, but I can't believe this. Because I watched it too, and I was like, oh, I forgot how fake this really is. I can't believe how many adults still watch this. I cannot believe.
Phil Huber thinks it's still real.
Have you seen the video? It's real to me, damn it. That guy. I can't believe how many adults watch this because my son, at 8 years old, saw through to me like, oh, this is fake. They're not really hitting each other.
I have two friends that still watch it. Phil, one of them, and another friend from home still watches every whatever it is.
To each their own. I can't believe people think it's entertaining. That's just me. All right, let's do some recommendations. Speaking of Glenn Powell, my wife and I watched The Running Man on Paramount Plus. That was his movie that came out last year. It was a retread of the Arnold movie from the 80s.
I never saw the original.
And I surprisingly didn't either. I'm a big Arnold fan. And they tried to kind of keep with the same vibe of the original 80s movie. So it looked like a movie that was made in the 80s, made today. And the premise is just, you have 30 days and there's going to be a team of people trying to kill you. You have to run. It's like a dystopian future. Like the guy needed money. So the idea is good. It's a pretty cheesy action movie. Did I enjoy it? Yeah, I enjoyed it. Glenn Powell. Not a good movie. Not like a high quality movie. An entertaining idea. How's that?
Okay. Know what else is coming out? I don't know why Glenn Powell reminded me of this. Godzilla -1. Oh no, Godzilla minus. They call it -0. I can't remember. There's another one coming out. The first one was amazing.
Yeah, Lord knows we haven't had enough Godzilla movies over the years.
No, these are real Godzilla, not the nonsense Hollywood one.
Okay, my son actually did like the first one. All right, so they did the Golden Globes last week, and Rose Byrne won Best Actress for If I Had Legs, I'd Kick You. And I saw her speech, and I thought, that looks good. I knew nothing about this movie. So I told my wife, I'm like, it's Friday night, let's watch a movie. Let's pull this up. We rented it. Oh boy. Great performance by her is about the best I can do. It's one of those movies where they're keeping things secret from you at the beginning. And so the first half hour, you go, oh, okay, this is happening, but something else is going on. And by the end of the movie, you go, oh, wait, nothing else is going on. A very infuriating movie from a plot perspective. Great performance. Terrible movie. Like it's an Oscar film.
Okay. Yeah, I watched the trailer with Robin, and I said, I'm not watching this movie.
I couldn't believe that, like, wait, this is all it's about? Just this? Okay. Finally. I'm still walking through my Robert Redford catalog that after he passed away and I never watched them all. I finally watched all The President's Men. I'd never seen it. Obviously not breaking new ground here. I think it won Oscar for Best Picture. But
everything. Yeah.
But the 70s are my like hole for movies. This movie starts and it goes and it hits the ground running, and I can see why so many people. It felt like it could have been made today, like a period piece about the 70s. It's so good. I understand why people liked it so much. And honestly, I knew kind of about the story about what happened at Watergate, but not really, not like the details of it. And yeah, so good. I will be watching that movie again. It was amazing.
You should
Redford
fill in
and
your 70s
Hoffman.
catalog.
Very good.
All right. His and Hers. You watching that?
Didn't start yet. Worth it?
Yes. I only saw the first episode. All right. Netflix does those shows very well. They don't do movies well. They do the crime series.
So it's like The Beast in Me kind of a miniseries, right? John Bernthal.
It's good. Yeah.
All right.
It's good stuff.
I'm in.
Have you seen Marty Supreme yet? Oh, no, of course you haven't. It's in the theaters. Everyone loves that movie. I'm excited to see it.
Yeah. You're a big table tennis guy.
I actually am. I think I can beat you in ping pong. Not to brag.
I'm not good at it. So
okay.
That's actually not to brag.
You ceded ground quicker than I thought you would.
Yep. You could take me.
Okay.
All right. Anything else? How's the market doing?
Worse.
Okay. All right. Could we see a replay of last year where we have geopolitical volatility, upheaval, quick correction? Oh, wait. The earnings are still fine. This isn't going to impact the economy. Off to the races. Could we see a repeat? Is that too simple?
I don't think so, because Liberation Day came out of nowhere. And everybody was like, wait, what are we doing? I think that it's not going to be, I can't imagine like the S&P going down 10% on like tariff threats or Greenland threats, or I guess it could, but I don't think it's going to be, I think something else would have to happen aside from the nonsense.
How about this? A market on Kalshi for every year for the rest of Trump's presidency. Will there be a 15% decline in the equity markets every year until he's out?
Well, that's average.
True. But I said the double digit is 2/3 of every year you have a double digit decline. I think we could just see this volatility every year from geopolitics now. I think that's just the new normal. Fair?
How about this? I would, purely from an investor point of view, so only speaking with my investor hat on, I would much rather deal with geopolitical volatility than anything else if there's going to be volatility in the stock market.
True.
Right? Like, because ultimately that is jawboning and rhetoric and whatever. Like, give me that all day as opposed to the story on corporate earnings turning. Because that's what really hurts the market. So, all right, we'll see what we say. Back next week. Animal spirits at thecompoundnews.com. Thank you for the emails. Thank you for listening.
Personal emails, personal responses. Haven't given that one in a while.
Gosh damn right. Have a great rest of your week.